The impending crisis, global de-dollarization and US hyperinflation. Hello everyone, and welcome to our video on the impending crisis of global de-dollarization and US hyperinflation. Today, we will explore what these two phenomena are, how they are interconnected, and what their potential impact could be on the global economy. What is global de-dollarization? The US dollar has long been the dominant global reserve currency, with many countries holding large amounts of US dollars as a store of value. However, in recent years, there has been a growing trend of countries diversifying their reserves away from the US dollar. This trend is known as global de-dollarization, and it is driven by a number of factors, including the US Federal Reserve's monetary policy. The Fed has been pursuing an expansionary monetary policy, which has led to a significant increase in the supply of US dollars. This has eroded the purchasing power of the US dollar and has made it less attractive as a store of value. Geopolitical tensions. Some countries, particularly those that are subject to US sanctions, are looking to reduce their reliance on the US dollar to avoid being cut off from the global financial system. The rise of alternative currencies. With the development of digital currencies, some countries are exploring the use of these currencies as an alternative to the US dollar. How is global de-dollarization connected to US hyperinflation? As more countries move away from the US dollar, demand for the US dollar will decrease. This will put downward pressure on the value of the US dollar and will lead to inflation. At the same time, the US government has been running large budget deficits, which require the government to issue more debt. If demand for US Treasury bonds decreases, the government will have to increase the interest rate on those bonds to attract buyers. This will lead to higher borrowing costs for the US government and could further exacerbate inflation. What could be the impact of global de-dollarization and US hyperinflation? If the BRICS nations continue to develop and trade in currencies other than the dollar, it could have a number of significant impacts on the global economy. Increased volatility in global financial markets. As the value of the US dollar falls, there will be increased volatility in global financial markets, which could lead to a global economic slowdown. Higher borrowing costs. If the US government has to pay higher interest rates on its debt, this could lead to higher borrowing costs for businesses and individuals, which could further slow economic growth. Increased geopolitical tensions. As more countries move away from the US dollar, this could lead to increased geopolitical tensions and a shift in the balance of global power. Global de-dollarization and US hyperinflation are two phenomena that are closely interconnected and could have significant impacts on the global economy. As investors and policymakers, it is important to understand these trends and to take steps to mitigate their potential impact. What can be done to address these issues? There are several steps that can be taken to address the issues of global de-dollarization and US hyperinflation. Fiscal responsibility. The US government needs to pursue a more fiscally responsible policy and reduce its budget deficits. This will reduce the amount of debt the government has to issue and will help to stabilize the US dollar. Monetary policy. The US Federal Reserve needs to be cautious with its monetary policy and avoid pursuing an overly expansionary policy. This will help to stabilize the value of the US dollar and reduce the risk of hyperinflation. International cooperation. The international community needs to work together to address the issues of global de-dollarization and to create a more stable and sustainable global financial system. This could involve the creation of new international institutions, such as a global reserve currency, or greater cooperation between existing institutions. Diversification. Countries that are heavily reliant on the US dollar need to diversify their reserves and reduce their exposure to US currency. This will help to reduce the impact of any future US dollar shocks and will make the global financial system more resilient. Global de-dollarization and US hyperinflation are complex issues that are interconnected and have the potential to significantly impact the global economy. While there are steps that can be taken to address these issues, it will require international cooperation and a commitment to fiscal responsibility and prudent monetary policy. As always, it is important to stay informed about these issues and to be prepared for any potential disruptions in the global financial system. Potential consequences of inaction. If the international community fails to address the issues of global de-dollarization and US hyperinflation, there could be severe consequences for the global economy. These could include a global economic crisis. If the value of the US dollar were to collapse, it could trigger a global economic crisis, as many countries and companies hold large amounts of US dollars. Increased inflation. As the value of the US dollar falls, inflation would increase, which would reduce the purchasing power of individuals and businesses and could lead to economic instability. Geopolitical tensions. If the US dollar were to lose its status as the dominant global reserve currency, it could lead to increased geopolitical tensions and a shift in the balance of global power. In conclusion, global de-dollarization and U.S. hyperinflation are serious issues that require attention from policymakers and the international community. While there are steps that can be taken to address these issues, the consequences of inaction could be severe. It is important for individuals and businesses to stay informed about these issues and to take steps to protect themselves in the event of a global economic crisis. We hope you found this information helpful and informative. If you have, please like, subscribe, share. Thank you for watching.